Burford Capital is the largest litigation finance company in the world, with locations in both New York and London. Burford, which has more than $2.0 billion in litigation assets on its balance sheet, purchases litigation claims from corporations and law firms and pays for the costs of litigating those claims. If the lawsuit is won, Burford will receive a percentage of the settlement or award. Burford's enterprise flourished in the latter part of the 2010s. Their earnings were skyrocketing, and their stock price was one of the best performers on the London Stock Exchange, increasing 15 times in value. Investors were feeling bullish because they knew Burford was suing the Argentine government over an expropriation case, and could win billions of dollars in compensation if they did. In the summer of 2019, however, the famous short seller Carson Block of Muddy Waters Research revealed that he had a short position in this talk and accused them of engaging in an Enron-style fraud, completely turning Burford's bull case on its head. To drive down the stock prices of companies he's shorting, Block is an expert at creating media hype. He even had adult film star Stormy Daniels speak at the press conference he organized to debunk Burford's credibility. In the days after Carson Block's brief report was made public, the stock price plummeted by more than half. Hello and welcome to Financial Fortune, the channel that brings you the latest updates and insights on the world of finance. Carson Block's short thesis argued, among other things, that Burford had inflated the value of the Argentina lawsuit through manipulation, and that the likelihood of a successful outcome was much lower than what investors had been led to believe. A year and a half later, on April 3, 2023, Burford announces that his clients have won their case against Argentina in a summary judgment ruling cited in the case. Burford's stock price jumped 75% after the announcement. While the exact amount of damages has yet to be determined, Burford is likely to receive somewhere between $2 billion and $5 billion. There are currently 218 million outstanding shares of Burford, with a price range of $9.24 to $24. At first glance, this appears to be a huge victory for Burford's shareholders and management and a devastating loss for short seller Carson Block. A favorable ruling in court is one thing, having the money in hand is another. If you've been keeping tabs on Argentina over the past few years, you know that the country's economy is in rough shape. Over a third of the population now lives in poverty as a result of the country's inflation rate recently surpassing 100. In comparison to the US dollar, the Argentinian peso has depreciated by more than 90% over the past 5 years. The value of the currency has dropped even more on the black market. Last year, an emergency agreement with the IMF kept the government from going bankrupt. Is the Argentinian economy in too much of a shambles to allow the government to pay its debts? Most importantly, Argentina is an independent nation despite the fact that 1/3 of its population lives in poverty. The government's decision to hand over billions to Burford's high rollers makes no sense. Because a judge in New York ordered them to. It seems like they could just refuse to pay.
So litigation finance is nothing more complicated than treating litigation claims as financeable assets. You know, you have lots of things, lots of kinds of assets that can be financed, receivables, for example. Litigation is just a special kind of a receivable. When I'm suing you, it's an effort to get money to move from you to me. There's risk and there's contingency associated with that, but fundamentally it's no different than me trying to get money from you in another form.
How much does the plaintiff walk away from percentage-wise when a venture capital, when a litigation finance firm comes in?
Totally depends on the underlying risk of the litigation, as you would expect. These are assets that are market priced just like any other risk-based asset.
Was it 55%? Is it 25%? What, give me a range here.
Well, as you probably know, standard U.S. contingency fees tend to run in sort of the 25 to 33% range, sometimes as high as 40%. Many of our returns, if we're starting a case at the very beginning, are in that similar range. But this is corporate finance. The business that we're doing is large dollar, large corporate activity. And so these are individually negotiated deals with large clients that depend on the risk.
So Muddy Waters goes in and they say that it's not that there's so many opportunities and that's not why you're getting such a big run up, but because of the way that you're pricing your assets. For instance, it says Burford has sold 10% of this particular claim in Argentina called Peterson, 10% of this claim for $40 million in December of 2016. by this year, this summer, 10% of that claim went for $100 million, which implies a value of $1 billion. How do you get on the same case from $400 million to $1 billion valuation?
Well, fundamentally, you get a big change in what has happened in the underlying case. And in that particular case, the Supreme Court of the United States came out and agreed with the position that we were taking. And that obviously has an enormous amount of weight and changes the valuation that sophisticated institutional investors are prepared to put on an asset like that.
Why is this company saying all these nasty things about you?
I don't have a lot of time to deal with Carson Block and his new sidekick, Stormy Daniels. You know, I think the reality is he makes his money by coming in very rapidly, running a short attack on a business and coming out again. He closed his short on Burford months ago, the day he started making all these allegations. And I think we've comprehensively debunked, and our investors agree, all of these allegations. What you're seeing now in the shares is some post-attack volatility in both directions, up and down. But what I think you have today is actually a pretty good value opportunity. We did 25% EPS growth last year, and you can buy, and higher before that, you can buy that level of EPS growth today at 6 times trailing PE. That's a pretty good value for long-term growth.
But you have said that this Peterson case represents a large share of your bottom line. And right now you're arguing in U.S. court that it should not be moved to Argentina. You don't think you can get a fair hearing in Argentina for this particular case. It's very risky. So tell investors, if you've got short sellers on your tail, if you've got court hearings going on, what justifies the risk? What's the return?
Well, our business is not about one single case, but it's about a large portfolio of cases. And at any given time, we have any number of large cases that are moving through the courts. Some of them will be terrific successes. Some of them won't make any money. And a large number of them, the majority of them, are going to settle. And that's what litigation is all about. Most litigation settles without going to court. And that's where the middle of the road in litigation finance exists, and that's how we make a good deal of our money.
How do you pick the cases that you're going to invest in?
So we work together, and our client base tends to be large companies and the large global law firms. We work together with our clients and the law firms to identify opportunities that are both financeable for the underlying client, where a CFO is saying, I would like to take some capital in against this litigation asset that I have today and that isn't doing anything good for me. So we work together with clients and law firms to find cases that both are meritorious and also have sufficient economics that everybody's going to end up happy, the client, the lawyers, and Burford and its shareholders.
Burford is a financial services firm. They bank on legal battles to come out on top. The value of a portfolio comprised of marketable securities, such as stocks or bonds, can be easily calculated on a daily basis. You need only check the current market price of your stocks and bonds. Because there is no active secondary market for litigation claims, they are much more difficult to value. As a result, Burford employs fair value accounting rather than mark-to-market. This is how it functions. Cost is used to determine the initial purchase price of a litigation asset by Burford. After that, the asset's worth could go up or down depending on events known as milestones, such as the issuance of a favorable judgment, the conclusion of all appeals by the defendant, or the conclusion of an arbitration proceeding. Because of these developments, Burford is now more likely to prevail in court, which boosts the asset's value. Commensurately, Burford sells stakes in the company's assets to outside parties on a relatively infrequent basis. Burford will factor the monetary value of these deals into the company's bookkeeping. Fair value adjustments are used to account for everything that must be evaluated before the case is closed. Each legal dispute will be settled at some point. If Burford loses the case without a reasonable chance of success on appeal, the value of the asset will be reduced to zero. If Burford prevails in court, the amount of the judgment will be added to the carrying value. It's crucial that Burford's earnings reflect the fair value of its judgments. Therefore, Burford will recognize this as income in the period in which it occurs, such as when the value of one of their litigation assets increases upon reaching a milestone, despite the fact that they haven't gotten any money as of yet. From 2015 to 2018, Burford's net income rocketed from $66 million to over $300 million. Fair value gains started contributing significantly to their net income in 2016, as shown. Their fair value gains this year top their entire net income for the year. The majority of the fair value increase during this time period can be attributed to the Argentine litigation markup. During this time, investors noticed Burford's soaring profits and bid the company's share price up by a factor of 10, piquing the interest of Carson Block of Muddy Waters Research. He suspected Burford of padding its fair value gains to artificially inflate its net income.
Well, I mean, look, that was a put down by Chris Bogart and of Stormy Daniels, which I think is totally beside the point as to how accurate their accounts are. But
Right.
if the question is, why did we do this video featuring Stormy Daniels? The answer is this. As Chris's comment or put down shows, as an adult film actress, she's not exactly among society's most venerated class of people, yet she is taking on the most powerful person in the country, one of the most powerful people in the world. So if there's anything you can say about my business and my team, it's that we love the David versus Goliath fights, and we respect her, putting the politics aside. So that's one thing that she had going for. But
Right.
the other thing was, in that video, we're pushing the boundaries because we're tired of this apologist way of speaking, of covering up, wrongdoing or by powerful people or people who are in the finance industry.
Yeah.
We wanted to speak very cleanly or very clearly, and we felt that somebody who really wouldn't have a problem pushing that boundary.
Let's move on
was
from the
Daniels.
video, which no one has
Sure.
seen, not no one, but no one on this air has seen, and from Stormy Daniels, and drill down a little bit more on Burford Capital. A lot of your writing and your initial short, as I understand it, was some months ago. Have you exited that short position, or are you short today, and if so, by how much?
So I'm very glad you asked that question, because Chris Bogart told at least one bald-faced lie when you had him in that chair on Tuesday. And that lie was that we had exited our position.
Correct.
Chris knows that is not true. How does he know that is not true? Well, since we first went public in August, I've repeatedly made statements publicly and said that we are short Burford. And we've published, since that initial report, 4 update reports, each one of which says on the cover that we are short Burford Capital. So this is very typical of Chris Bogart, who I've come to really feel is a fundamentally dishonest person. So that was a lie. We are still short Burford.
So, Carson, help us understand, are you still short Burford Capital stock, and have you reduced your short position?
So we are still short Burford Capital stock. Now, when we traded in, you can see there are publicly available records in the EU that show that we had a peak risk position, that because we have a small fund with limited amount of capital, we could not hold. But the stock was also down 70% in 2 days as well. So we reduced risk to one that's sustainable, but it was still an aggressively sized short position. That said, about 1.5 to 2 weeks ago, we trimmed it a little bit ahead of the UK elections, just because we didn't really want to figure out how to try to hedge the beta of that election.
Well,
we've been short this company consistently, and it has been an aggressive short position that has been meaningful for our P&L.
I want to go to a couple of things you've said about this company and then try and get, for our viewers' sake, to the heart of your claims about the company. You say Burford's liquidity is risky, it is arguably insolvent, it is a perfect storm for an accounting fiasco, and its governance structures are laughter-inducing. You can pick up on those comments in just a moment, but I want, for the viewers' sake, to understand exactly what it is that you find fault with Burford and its accounting, and let me take a stab at it. It's fundamentally that they deal in esoteric and illiquid, not easily priced assets, and your view is that they use a model that you liken to Enron's model to value those assets, and that they have overvalued them, creating an incorrect financial picture for investors. Have I got that loosely right?
Yes. The key point being that under accounting rules, these are level 3 fair value assets. So there's no market that you can look at and say this is what it's worth. So they get to determine their own marks. And that's fine if they were paid on cash. And when this company first went public, it was a closed-end fund, and Chris Bogart, et cetera, did not have equity in that fund. They were paid a 2 and 20. That's fine because you get paid on realizations. But then they merged that management company into the public company, got a bunch of equity, and they started telling everybody it should trade on an earnings basis. And that created the incentive to basically juice the earnings and kind of make up the E. And he even said that on your show the other day. He talked about how it's such a great deal at a PE of 6, when in reality, this should trade on price to book, but price to non-marked up book. So he's made about $75 million at least selling stock on the back of what we think is just this big stock promotion. And I suspect that he or another insider took out margin loans, because when you look at how the stock dropped in the wake of our initial report, again, down 70% in 2 days, that looks to me like that was a margin loan just blowout there somewhere. And so it's quite possible that he's taken a lot more money off the table. So for all of his accusations of, you guys covered, this guy's been running a stock promotion, and he pocketed a lot of money on the back of it.
So let me go to two things as we wrap this up. One of your critiques was that his spouse, the CEO's spouse, was the CFO. I am told that that is no longer the case, and that may have been in response to your criticisms of that practice. Do you believe fundamentally that this is a fraudulent company?
So I think, look, these people are lawyers. They're very clever. I think it's quite possible they've gone just up to the line legally, and that it would be very difficult to prove fraudulent intent in these marks. That's the beauty of running a stock promotion with level 3 fair value accounting, because unless, if I'm a prosecutor, unless I can prove that what was in your head was that you knew the asset wasn't worth X, but you marked it there, I don't have a case. But one thing that I think is really important to talk about, and you guys touched on it with him, is this Peterson claim. And that's why he was on your show the other day, was because I brought up questions on Twitter about who the buyers of the Peterson claim were, and I questioned whether the company, which manages funds that are off its own balance sheet, whether the company moved part of the Peterson claim from its own balance sheet to an outside fund balance sheet that it manages and recorded a gain on that. And it turns out, after I tweeted that we found that at least 30% of that sale was to a Burford managed fund. And Chris Bogart didn't talk about that, and he's not really willing, I think, to have that conversation. But that, I think, is a very serious issue, because it really calls into question the proceeds that Burford's received on the Peterson claim, along with another question that nobody has posed, and it's a key question. Can that Peterson claim be satisfied in local currency legally? In other words, under the U.S. court judgments, if Argentina did decide to pay it, could they pay it off in Argentine pesos? And that's something I think people also should start pressing the company on, because I think they might be surprised by the answer.
It's a complicated story, Carson Block.
Carson Block, who is short Burford shares, has made allegations that the company artificially inflated the value of an Argentine litigation asset by having a third-party fund managed by Burford buy into the claim at an inflated price. In essence, he is claiming that Burford sold the asset to itself for the sole purpose of generating an imaginary financial gain. He argues that the case's lack of merit stems from the fact that any judgment would be rendered in Argentine pesos, rather than US dollars. Since the expropriation in 2012, the value of the peso has dropped by about 98. Therefore, if Argentina were to make the payment in 2012 pesos, it would be nearly worthless. Legal victory. Argentina was found liable for the expropriation of YPF by the U.S. District Court for the Southern District of New York on March 31, 2023, and massive damages are anticipated to be awarded. The damages will be settled in U.S. dollars, not Argentine pesos. It's great news for Burford that one of the major bear cases in the Carson Block has been settled in his favor. Summary judgment against Argentina was issued by a court in New York, where Burford is headquartered. The United States is Argentinian trade's third biggest partner, surpassing even Spain. If the United States imposed economic sanctions against Argentina, the country would have to pay a lot more than $13 billion. Having said that, Repsol was a key player in the industry as Spain's largest oil company. Since Burford is a niche finance firm and plays no strategic role in the U.S. economy, the United States is less likely to exert pressure on Argentina. Most likely, Burford will negotiate a settlement with the Argentine government in which the latter agrees to pay a percentage of the damages determined by the court. Because of this, the face value of the settlement is likely to be at least $9 per share, but the share price of Burford only increased by $5 after the favorable summary judgment. That's all for today's video on the multi-billion-dollar showdown between Burford Capital and Argentina. We hope you found this explanation informative and insightful. As always, if you enjoyed this video, please like and subscribe to our channel for more content on finance and investing. Thank you for watching, and we'll see you in the next one.